Let's now take a look at the third entry type called the double confirmation entry, right? So typically a double confirmation entry would be a confirmation entry of a confirmation entry on that lower time frame. So you can see here on the screen, we have our original example of the risk entry, right? So we have pressure to the downside, higher time frame, bearish order block, price coming back to it in a strong momentum, right? Now, there's two ways we can use the double confirmation entry. Of course, as the title might indicate, we can use it for entry. However, we can also use it as a way to manage our trade and our risk, right? So if for XYZ reason you entered the trade on a risk entry perspective, right, we can scale into the lower time frame, right, and monitor that price action to manage our trade and our risk, right? So when are we going to look at mitigating our risk or setting our stop loss in profit? Okay, that's the second way we can use that entry type. However, we can also use it as an entry, right? So if, for example, we don't enter on risk entries and we look at confirmation entries, but for XYZ reason, we missed on the confirmation entry, or we wanted more, more information, more confirmation to enter this trade, we can look at the double confirmation. So just like the the confirmation entry, we wait for a break of structure breaking, your previous lows to create this newly fractal order block. Now price could return, right? Give you an opportunity to enter on this confirmation entry and move lower, or it can, come shy from this order block, come, let's say, over here, and then push lower to create a new break of structure, right? This is where the double confirmation entry could come into play, right? Where you'd expect price to gravitate back to this area to mitigate and then push lower, right? Because naturally, on a multi-time frame perspective, we know that within higher time frame turning points, right? Let's say we have this, we have that, and we have this, okay? If we zoom in this area here, we're going to have lower time frame structure, right? Moving up and down. We can clearly see bullish market structure, and then we're going to start seeing bearish market structure on the lower time frame to continue with this higher time frame bearish move, right? So there's going to be multiple entry points, multiple opportunities for us to enter. This over here would be your your confirmation entry, and of course this over here would be your double confirmation entry, and right, we can go to a third confirmation and all that. However, I wouldn't go to that extent, because the lower you go, right, the more the move has potentially been completed, and the higher the likelihood of price to move up higher and then lower again, right? So not only this could be used as just a safer way to enter the markets, it can also be used to manage your trade and manage your risk on the confirmation entry or the risk entry type, right? So the pros of this entry type, of course, you're entering based on a lot more information. You have a better certitude of price moving in the right direction and being in a positive trade. However, the biggest con of this entry type is the time that it requires for you to monitor the lower time frames, right? That's number one. And number two, it really does increase the likelihood of you to miss out on a trade, right? So just like this could have not come back to the confirmation entry box, right? This could be the same on the double confirmation entry price, right? Where price could just retrace a little bit and push lower, where the actual entry would have been ideal on the confirmation entry fractal order block over here, right? Now let's take a look at a Japanese candlestick live example for the double confirmation entry on GBP USD here. Okay, we can see that previously we had bullish market structure, breaking structure to the upside, price mitigating different points of interest, and then potentially shifting market structure to the upside, right? So we have corrective move to the downside. However, we're starting to get a sequence of higher highs and higher lows, right? Even though price came back down here to create a lower low, we can clearly see equal lows here, price drawing on liquidity and impulsing to the upside, creating this point of interest on the 15 minutes, okay? Now, if I just zoom in, okay, onto the 15-minute over here, we can see that this first entry point is your risk entry, right? So we can clearly see this impulse to the upside, right, creating a lot of imbalance along the way, breaking previous point of structure, giving you this point of interest, this bullish order block, right? So we would be expecting price to gravitate back to these areas in a corrective manner and then enter. So this would have been a valid risk entry type, right? Because we are pro trend, okay? We saw the higher time frame really pointing to the upside, and then the move to the downside being extremely corrective, and then seeing clear market structure to the upside. Okay, on the 1 hour time frame, we had equal highs over here, giving us buy side liquidity to target to the upside. So reason and cause for price to move further up. So all we needed was price to mitigate this imbalance or price inefficiency, tap into this 15-minute order block and move to the upside, right? However, if you want to enter on a confirmation entry or a double confirmation entry, let's take a look here down at the 5-minute execution time frame. Okay, so once price taps into this higher time frame order block, which in this case is just the 15-minute block, right, we start seeing price running the lows over here, right, purging liquidity, and then slowly after shifting in market structure, right? So right here we have a first confirmation entry where price taps into this order block on the 5 minutes, moves higher, however comes back to this point of origin to fill more. There might have been some price inefficiency on the lower time frame to then move higher, right? Let's say, for example, we got involved in this trade here, okay, with our entry here, and then we could have potentially taken some partial profits at this structure high, and then closing our position at break even. If we still believe in this trade moving to the upside, right, even though we got closed at break even or the remaining of our position closing at break even, we could look at a double confirmation entry where we had, you know, this move to the downside, little pause in the market, and move lower, right? So shortly after, we can see this impulse to the upside breaks this point of interest, okay? So we have right here a break of structure to the upside, okay? So this is your bullish break of structure, and what we'd be expecting, we'd expect price to come back to this newly created fractal order block as a confirmation of a confirmation entry, right? And then I would factor in the lows down here. Okay, the entry would be at the proximal point or the equilibrium point. Not even sure if it did retrace the equilibrium point. However, I wouldn't be greedy since we are entering on such a small time frame, which you can see here, it did hit the equilibrium point, right? So if you like to pinpoint your trades, this would have been, you know, one variation of your entry. However, ideally, increase your likelihood of being tagged into the trade with your entry at the proximal point. Your stop loss at the lows here would have been 6.5 pips with a buffer of about 2 pips, so 8.5 pips. And then we would target the buy side liquidity to the upside, giving us well over 9 times our risk, so a 9.72 risk to reward trade setup. So we can see that first we had our risk entry over here. Okay, second, we had our confirmation entry here. Once we started seeing market structure shifting to the upside, right? This was your first confirmation. And then shortly after, price coming back in here, we had a newly created order block down here based on this break of structure. Price gravitates back to this point of interest and then shoots to the upside, right? This is a perfect example of a confirmation entry. Now, this was an example of an entry, right, on the double confirmation entry type. However, if we did enter on the risk entry point, right, as price is moving to the upside and seeing these lower time frames being formed, we can then manage our trade, right? So if, let's say, this move to the upside, this move to the upside wasn't enough, right, to take partial profits or mitigating risk, right? So as price comes back, this is also, right, a price coming back to the point of origin, slightly spiking below these lows, right? However, this order block, right, this confirmation entry order block here has always been respected, even though it spiked below, right? You can see it only spiked below but never closed below it, right? So we never wiped out this lower time frame order block or point of interest, right? So as we manage our risk entry, right, on the lower time frames, we can still hold this trade, saying that we're still in a valid, market structure, or price is just printing, new price action within this higher time frame order block, right? And as price breaks above these highs here, that's when we could look at, mitigating our risk, maybe even taking some partial profits along the lines of these highs here, because we don't know if price, once it reaches these highs, if it's just drawing on liquidity and then potentially pushing lower, right? However, we had a lot of confirmation, right? We had the higher time frame structure pointing to the upside. We had clear impulses to the upside, imbalance to fill here, and every impulse to the upside here was pointing up, and then every move to the downside was quite corrective, right? Notice that in every double confirmation entry order block, right, we had imbalance that was created here, and once again imbalance over here for a double confirmation entry.